Okay, welcome to the weekly take on the market. I can't find myself. Am I on screen? Am I being recorded? Let me share my screen. Okay, I'll be your host. My name is Scott St. Clair. I'm the manager of the Premium Product Group here at Investors Business Daily. Let's take a moment to read the disclaimer. You guys have heard this before. Not licensed. Don't have a 7 or 63 or any such thing. Okay, we'll go through the market indices. We'll do, I couldn't come up with a good trade, bad trade, partly because I haven't done hardly any trades this week. I've been very inactive. So nothing, I've done a handful of stuff, but nothing that's stood out. Like it's all been very pedestrian gains or losses and just not totally in sync with the market. To me, it looks like the market wants to go higher, but there just aren't a lot of setups, which is the hard part. So if it's going to go higher and there's no setups, unfortunately, it's going to go up mostly without me. But that's fine. I wish that today was December 31st. I'm ready to start the new year. I'm ready to spike the football for this year and start anew in 2026. But a couple more months still. So just a couple of anecdotal charts that I found on Twitter. Mostly I find this stuff on Twitter. Number of leveraged equity ETFs is, skyrocketing. Of course, that's when they come out. They don't come out at the lows, so to speak. They come out at the highs, so to speak. It takes a bull market to generate interest in this type of stuff. There won't be any interest in 3 times long AMD ETFs in a bear market. At least not to bring one out. Maybe it'll still exist. I did see some talk of 5 times leveraged ETFs. As a short seller, I really hope that they bring those out, although I doubt they'll let you short them. They probably won't let you borrow them. But if you're 5 times leveraged AMD and it goes down 20%, that ETF goes to zero that day. Now, can AMD go down 20% in a day? Yeah, it can. Is it likely? No. Is it probable? No, maybe not. But it can happen. And so these are really flawed products. Caveat emptor, buyer beware. But they're fun, and you can trade them for half a minute or a minute. But I think the 2 times is probably the most that I would go as far as being interested in those. I don't know if I would ever. I've done the TQQs before, but I just haven't handled it all that well because of the leverage. So if I'd normally buy 1,000 Qs, I buy 1,000 TQQ. I just haven't done the math. I'm like, oh, I want 1,000 shares. So maybe that's why it's a me problem, not a market problem. The gold bull market. So is this just a pause or a peak? It looks a pretty stretched short term. We'll pull up the charts, but I thought this was interesting when you, there's obviously problems when you overlay charts like this, but they're fun and interesting. They get you thinking about what's possible both ways. And that's kind of the key for me is the tremendous possibilities. Now, I don't know if we want $20,000 gold. I don't know what that means for the overall market. Maybe it's just a total debasement and the overall market's much higher. And you're just going to have to participate to stay in line with the debasement. That's the to protect your purchasing power. That's kind of a macro view that some people have. But I find this interesting, and I think gold really needs a pause, which would be nice, because if you've missed gold, either you're not interested in it or you just missed it, which is possible. But some people might say, well, I'm just not going to buy gold, which is fine. But there's a message in gold. Maybe I'm overreading it, but I feel like there's a message in gold somewhere, the move that it's made, what it's trying to tell us. I don't know what that message is. That's the problem. I thought there was one more chart that I wanted to pull up, but maybe not. Okay, before we go to good trade, bad trade, let's go to the charts. Let me turn off my camera. And the indexes, they just don't want to go down. They're still in this kind of channel. And I think I've talked about it. Like, look, market down 2 days, that's it. Down 2 days, barely down a third day, down 1 day, back up. Bad day, up the next day. You just can't even get, if you're looking for downside, you can't get any follow through to the downside. So until you get some follow through to the downside, it's really hard to be bearish. Now, that doesn't mean you have to be bullish. There's an in between. There's, they always say there's bulls and bears. I'm not sure why they didn't create a third category, canaries or something like that. So I think it's okay to be in between. Some people will say cash is a position, and it's a constant ebb and flow. I don't know why there's this feeling on Wall Street that you're either all in or all out. And mostly they're all in. That just puts a lot of pressure on yourself. So constant ebbing and flowing of being 20% invested, being 80% invested, being 100% invested. And I'm just talking in a cash account type strategy. And I wish I could figure out the math on what my average exposure to the long side has been this year in my Roth IRA, for example. I don't know how I would do that. I don't even know if it's possible, but I guess if I were to, maybe I'll track that next year. That might be interesting. Let me write that down. Average exposure. I would have to each day take my exposure that day and then put it in an Excel spreadsheet or something. I don't think there's anything that would, any kind of automatic thing, but I think I'm going to do that. Hopefully I don't forget. If I forget a day or two, so be it. But yeah, I'd be curious to see. I bet my average exposure all year has been, well, we had April where I'd had very little exposure long, if none, in that sell-off. And then it's really hard to get to 100% exposure, right? Because in a cash account, I'd have to see how much cash I have and then buy, 14 shares of NVIDIA on this account. I just don't think it's worth the effort to micromanage it that well. So it's definitely less than 100 for sure. It's probably, I bet it'd be about 65% average exposure. But when you get the types of stocks that we can identify, and I have missed and mishandled so many this year, it's incredible, which is partly why I just want to get through the year, despite get over with. But the Bloom Energies, the outflows, the circles, I'm just looking at my sheet here. The quantum stocks, which I totally mishandled. I caught the first wave a tad bit, but the second wave was the best wave, and I totally missed that. And then the semiconductor stocks, there's just been so many good ones this year. So there's been a lot of ways to add points this year, and hopefully you did that. And it's a really good, I guess it's a good thing to be disappointed in your performance and still be up a lot more than the market. And that's kind of where I stand. But disappointed, to be honest. It should have been a home run year, and I just didn't handle it very well. Okay, so let's look at the S&P. And I still see that we're kind of in this. Until we get some sustained weakness, I just don't see any reason to be bearish. You want to be 70%, 60%, 40%. That's fine. I don't love the market here from our style because there isn't any setups. How do you get setups? Well, you get this massive boom. What happened during that? Hood and Palantir and what else went down and built all these double bottoms and bases. So these are great environments for setups. This is not a great environment for setups. It's a great environment for being in those setups and being patient. So if you still have like the hoods and some of those, then you're participating. So right here as we sit here, I initiated a new position today, but there just aren't a lot. There just isn't a lot that I see to be active with newer positions with, I'm okay with a quasi kind of buy point, but I'd prefer, a really good buy point, but I'm okay with kind of manufacturing one off the 50-day or something like that. But even though those are few and far between. So the market is what it is. IWM, uptrend, gold. So gold had that bad break. So, and then you caught a bid for half a second. I hopefully this is part of something like that. If you're interested in participating in that, silver looks a little bit worse. Silver tends to be a lot more hyper than, silver is like gold on steroids, so 35 to 50 is a really good move in a short period of time. How about the cryptocurrency? I bet. So I really think that, right or wrong, that this is where the next bear market, whenever it comes, will this is the canary in the coal mine, because this is where all the speculation is and all the fast money and stuff like that. So I think these are important to watch if you're not interested in them, and you finally have, like, if let's put the S&P across the top, or let's do that. Or let's overlay them. Oh, that's a new chart window. That's not what I want. Hopefully you can see this. I don't know if this is going to be visible, but we're going to go with it. And we're going to do this year. So 1/1/2025. All right. So let's look at the new highs in IBIT. And are they confirmed with the S&P? So, and new highs here and the S&P here. Yes. And then they both break down, which makes sense. And then you finally get like a higher high on the S&P there, and Bitcoin confirms. And then you get a higher high there, and the S&P is confirming. And then you get a higher high there, and the S&P is confirming. But then now you're finally starting to, very strange. So you get a higher high here with the S&P, non-confirmation. That would be bearish to me, that type of signal. But guess what? It just blew through that bearishness because the S&P made a higher high and Bitcoin did as well. But this could be a bit blow offish or blow off top type, because now you've got S&P another higher high, although barely, but Bitcoin's not even close. In fact, it's more down near these lows here. So I think this is a canary in the coal mine. Maybe it's too soon, but I would watch this for clues, I think. So you have Bitcoin, and then you have Ethereum, and I'm sure there's a million other coins, but I only follow the ones that trade on, with ETFs. So very much like Bitcoin. I mean, I don't know what the correlation is, but I'm sure it's gigantic. All right, so that's really all I have about the markets. I think it's right or wrong for me. I just don't see it as a time to be all that aggressive. I am long. I am short a little bit, but just not having any success. I'm not knocking out of the park shorting, so I don't have any desire to press that side either. So I'm just kind of looking around, and sometimes you need a break, because I am very active. I'm in this every day, all day, every day, and so I feel like maybe I'm burned out a little bit, and so it's the market is, I see what I want to see, right? There's an old adage in the market, believe what you see, not what you think. So maybe I'm seeing what I want to see, and I want to see a market that's not really going anywhere, because I want to subconsciously be in cash. I think this game is all psychological, pretty much. All right, let's go to stocks to watch. And there's so many good semiconductor stocks. There's a guy that has a Substack called Oh my gosh, semiconductor. See, I just wing this, and I just thought of him because the Russell Clark, and he has a paid service, but I think he will give you previews of it. I don't pay for it, so but I get his email, and sometimes I'll listen to his preview. But he calls semiconductors the new oil of like the 1970s when oil was really really moving. So the semiconductor industry is so important, and it's really powering the market. The whole AI thing, obviously. So Lam Research just acting great. Look at the weekly chart. AMD, absolute powerhouse. Nvidia is a little tired, but it's not going down either, right? So Nvidia is a little tired, and you can don't take my word for it. Just look at the short-term RS. I think the last time I looked, the 3-month RS was like 58. Yes, it's 49. So the 3-month RS is 49, and the 6-month is 83. So it's a little tired. That's just kind of the fact, but it's hanging in there just fine. Avog, Broadcom, I always want to call it Avago because that's what it used to be. This looks interesting. I actually think, see, if I was being a little bit more aggressive and more bullish, this looks viable to me. That looks like it's another leg up. But one thing about Broadcom, you kind of have to be patient with it. So if you bought it there, it just kind of sat there. And if you bought it there, sat there. And if you bought it, I guess if you're in through the earnings report, but then even through the earnings report, it's not, if you, let's say you sold on the earnings day at 350, well, it's barely higher than that. So it's one of those kind of ones where you need to be patient. Well, Intel is perked up, but you announced earnings and you got a bit of a reversal today. And you have had a bit, like look at IBM. Wow, look at IBM today. I had no idea it was doing that. So you had this really strong reversal yesterday, and if it wasn't IBM, I think I would have bought that because it's IBM just doesn't seem all that exciting to me. But this incredible action today, I don't know if there was any news. What else is out there that in that semi area I wanted to talk about? Oh, on the memory side, SanDisk. Look at just so the ants. I like the ants after the fact, but didn't get quite the pullback I would have wanted. Ants by the pullback. I think that works very well. At least what I have observed. When you get the ants by the first pullback, I would have liked a little bit stronger pullback, more to the moving average, but the stock's so strong it just doesn't cooperate. I don't know what they're doing, but they must be printing money because stock is on fire. Western Digital, not as strong as SanDisk, but still has been a really huge winner. And then Micron acting well is super well. So here you get the ants, you get a little pullback, you get the ants, you get a little pullback. So the answer, a good indicator of just basically, hey, this stock is really strong. You probably want to be interested in that, but I wouldn't run out and just buy it. Oh, it's got an ant, let's buy it. I don't think that's the right strategy, at least for me, if you're using the stop, because I'll find a way to, oh, buy the ant, oh, get stopped. Oh, buy the ant, get stopped, and then be frustrated with it. So that area is doing really well. Let's look at like Hood. This is holding up just fine. Nice bounce off the 50-day. Did a couple of nice bounces off the 50-day. Palantir, my alert went off today. It feels a little sleepy. I don't know what the 3-month RS is. I know it's going to be better than NVIDIA, but I'm going to guess it's like 72. Okay, 78 and 87. So not that bad, but a little sleepy. It's made a big, big move. It's just made such a big move. For someone looking for, I like to buy them and I want them to move right away. It's kind of the old school way that I used to buy stocks, but still have that kind of mentality. So I don't, I haven't been doing much with Palantir in a long, long time. The stock I did buy today was Light. So when you buy it, and I should have bought it yesterday, and because I tried it there and got stopped out, and I should have bought it back yesterday. But again, it's kind of sleep at the wheel. It's just kind of not interested in putting more risk on. But today I just had to buy it because I just was afraid it was going to get away from me. Number one group, quarterly earnings and sales are accelerating. And when I see like, looks reminds me so much of like Western Digital and SanDisk, and it's gone, it's extended, it's too late, you can't buy it properly, and then you look back 3 weeks later and it's 200. So that was, to me, the risk reward is skewed, that I didn't want to let that pass. Let's look at like Oklo. So this looks like a top to me, but can it go to 150 or 160? Sure. But this looks like probably a bunch of sideways action. Remember the video I did on like SMCI, where just because it tops doesn't mean it never rallies again. Bloom Energy. So if you force me to buy Oklo or Bloom, it's an easy decision. This one looks really good. Another one should have been bought yesterday. Probably can still be bought today. That looks like, barring some unforeseen event from the market, that looks like going to take out that peak, is my guess. In the Chinese area, Baidu, you got a little pullback to the 50-day or 10-week line. So that would be interesting to me. Again, if I was really bullish on China, I kind of think Chinese stocks are going higher, but I also, I'm wary to the news. The news makes it tough. Baba looks very good. I was hoping for more of a pullback here. I still might get it, but I'm not going to get it around 150. It's probably going to be more like 160, 165. What else is out there that, let's look at the quantum stocks. Canaries in the coal mine. I would watch these for the animal spirits. Very important, I think. Now, can these stocks blow up and the market hold up? Yeah, for sure, that can happen. But they also could lead to some market weakness if it got really bad. So Rigetti, QBTS. See, they closed really poorly, and then the government rumor that the government's going to invest in them. It makes it tough. We're in one of these weird periods with the market where there's a lot of risk on both sides, from potential policy, etc. What else is IONQ? So my 2 cents, I think these are shorts, but I'm not sure what the timing of them is. I was short them for a little bit of this move, but I just don't have a lot of conviction in the short side either. So I didn't capture a massive move. What else? Other areas that you can watch for market signals: KKR, APO. I think these are, in the private equity field. If there's problems there, people say there are, but let's see the stocks vote. They're not participating in the market at all, but they're not blowing up either. What else? Oh, the banks. You got like Jefferies, Zion. Was it QB? Interesting. So QB had a bad day, but wow, look at the move. Pardon me, move it. It's made back. I think there was one called Eagle Bank Corp. That was down 12% yesterday, maybe. But I mean, this looks sickly. It's been sickly for a long, long time. So I don't know if there's any signal there. What about energy? I haven't looked at energy in a while. So Talon coming off the 50-day, and VRT, real powerhouse. I think Leaderboard is in that one. They've handled that one very, very well. Is it VST? So a little bit of sideways action. They've made big moves. They probably need to consolidate those moves for some time. BWXT, LEU. Wow, pretty good bounce back by LEU. It's up 86 points off that 3-day low. All right. So that's kind of what the market's doing. I think I'm going to leave it at that. I just don't really know exactly where I stand as far as the where we are in this cycle and what's next. I'm looking around, that's for sure. Okay, the quote of the week. I have used this one before, but it's been a while. I should use this more often. I should tape this to my screen because I fall for the mindset as well. The more you pay for stocks, the safer they are, and for the most part, the higher the expected return. The quote will have you thinking, like the more you pay for it, the higher it is, the safer it is. For the most part, the higher the expected return. Aaron Brown, he wrote a couple books and he was a risk manager for AQR, I believe. And he has some YouTube videos, which are they're good. If you're a junkie like me, I would search Aaron Brown risk manager or YouTube or something, and you can see. I think he teaches some classes as well. He's a very, very nice approach. Doesn't his I like his delivery, and he just seems super knowledgeable about the market. So this I find, like, for the SanDisks, the Western Digitals, and the AMDs and the NVIDIAs, this quote like fits perfectly. Like SanDisk, oh, there was no buy point, you can't buy it. Well, it doubled from where there was no buy point. And Micron or AMD or NVIDIA or et cetera, et cetera. So when you see Bloom Energy, Oklo, even Oklo, I mean, I thought at 100 that was stratospheric, and it went to almost 200. So when they're in motion and they're powering, they're near those highs, the market is sending you a message about those companies, about what they're doing, about those stocks. We aren't the only ones that see that. There's billions and billions of dollars out there that see these prices and they vote. If they thought these prices were too high, there's so much incentive to vote against them. They could, all these hedge funds with billions of dollars can make a bloody fortune. So there really is a message in the price that you see, what the stocks are telling you in relation to their 52-week highs. And ideally, you'd like to buy them at 52-week highs after 5 weeks of a base, or 8 weeks of a base, or 12 weeks of a base. But I don't know if that always has to be the case. There's a great quote. Let me see if I here. Let me do a double quote here. Let me pause my screen. Oh. Where's the pause button? Zoom changed on me. There's no pause button. I don't know what happened here. It's got to be a me problem. Anyways, I'll use the quote next week, or next week you might have Arnie and Harold with their event. So I won't be on next Friday, but the following Friday. And basically it's from Bill O'Neill, and he said, I have to admit I've been buying that stock. And it was a radio show he was talking about when we had the radio show at IBD. It's like 2013 or something. And I can't remember the name of the stock, but I remember watching the stock and seeing it and thinking, oh, I'm waiting for a place to buy it. And I'm waiting and waiting. And then he came on the radio show and said, I have to admit I've been buying that stock. And he's like, sometimes you're not going to get a perfect buy point. The earnings, the sales, the market, the industry group, if that's all there, then, this is his words, or my words, not his, then the risk reward is in your favor. And you want to take that risk for the potential for the reward. So that should do it. Contact us, 800-831-2525, marketsurge@investors.com. Have a great weekend, everybody, and I will see you guys in a couple of weeks. Thank you.